Good evening, everybody. Tonight we're going to just kind of take the logic in step using what we know about analyzing the market trend and then analyzing for the best sectors. But it can be done in a couple of different manners. Now, as we have seen over the last, prior to this big whipsaw move, we had a session where the Dow was going positive and the NASDAQ was going extremely negative. So that kind of sorts out the analysis fairly simple, that stocks that are oriented toward the high-tech or the NASDAQ stocks were heading down, while stocks oriented toward the Dow and S&P were heading up. So that made it fairly simple just to analyze or just to assume that you could be short the high-tech stocks and you could be long the basic stocks, the steels, the things like that. But also what makes it very simple to know which sector to be in is if you can analyze what gold prices are doing. If gold is heading up, then more than likely you want to be in some of the gold stocks. Just very simple logic. So if that gold is strong, stocks are going to follow. If silver is strong, silver stocks are going to follow. If crude oil is strong, crude stocks. So this is just very simple. Observe the obvious. That anytime we can see a sector acting well, we can pretty much go to those stocks and that sector. What would you call this reverse? What would you call this reverse kicker on the NASDAQ? It's not a reverse kicker. There isn't a reverse kicker, but we'll get to that in a second. Or you find the stocks that are all having strong breakouts, where you can see they've been in a congestion area, and then they break out. Again, that would be kind of related to, in this case, crude oil prices. Or mining stocks that all of a sudden start popping. So one way to find out which sectors are good is if I see a chart that looks like this, like in Freeport. I can think, all right, I found a good stock, but then all I have to do is go back to that sector and say, did other stocks do this or have strong moves? So logic says if there's a lot of stocks in a sector starting to move based upon you coming across a scan of one good one, you just go back and you find out if that whole sector is moving. I mean, that's not rocket science. If something like the game or the Bitcoin stocks start breaking out, you go back and see if there's others that are in that sector that are doing the same thing. So if we can use the indexes as an indicator, and we can see that the NASDAQ did a belt hold signal yesterday. Belt hold signal, sorry, not gold spy reading my notes. Right. All right, Colvin. But if we know what a belt hold signal signifies, that they opened it and started trading positive. What was that telling us? They were wiping out a lot of the sellers. And what does that tell us? Well, if there's any buying after that, there's not very many sellers in the way. So here was a very strong bullish signal today. Where to find a list of all the sector ETFs? Jim, do we have that down in the file in the bottom right-hand corner? Yeah, you could call it a meeting line. Didn't close exactly at the same level. Doesn't a belt hold need to open out of the trading range? Well, you can see here was a trading range, and they opened it way down here and brought it back in. If you want to call it a meeting line, you can call it a meeting line. But the fact that they gapped it up today and traded positive confirmed the belt hold signal, which meant things probably in the NASDAQ area were going to act strong. So what's in the NASDAQ area? We can see the ETF on the semiconductors. Did the exact same type of signal. Were you that it closed below the 50? No. What's the 50 have to do with a trend? I'm not buying the 50. I'm buying the signal or the pattern. Everything else is just an indicator. So if we see a strong move like this, and we see a strong move in the semiconductors, what's the obvious? The semiconductors are going to be producing very strong trade setups. DD, I have no idea. Oh, is this weekend Memorial Day weekend? We are going to have a Saturday session, which I'll get to. And it's going to be very attractively priced. It's going to be free, and I'll explain why later. But anytime we can see these type of signals, all corresponding with the, oh, that's right, next weekend. This weekend, we're doing a free session. And then next, the 29th, we are going to be doing a session on how to identify the breakouts. Okay, so where was I? Oh, so you can see NVIDIA did exactly what the ETF did and then exactly what the NASDAQ did. Run. Get a strong bullish signal. There's your bullish left-right combo. Yeah, I see it on my calendar now. So that's a very strong signal. Just the fact that it did a left-right combo on its own was strong, and then they gapped it up from there. You got to kind of assume here's your next target, because this is showing a lot of strength. So if the semiconductors are strong, and we can see crude oil is doing this, we got to kind of get a little advantage to say, all right, are there sell signals in crude oil stocks? We could be shorting those and going long. So this is not rocket science. If you can analyze an individual chart, and then you can analyze which sectors are acting the strongest if the market is heading up, then you can go right down to the individual stocks in that sector and simply analyze or scan for the strongest ones in that sector. That's basically called putting all your stars in alignment, that you're just using the logic that if there's an uptrend, then a sector is acting strong, then you find the strongest stocks in that sector. Is run also a cradle pattern? I don't know. No, because this is a green candle. If that was a red candle, but you can still give it the same analysis. Remember what another indicator looks like. A series of dojis. Remember, if one doji means indecision, a series of dojis means greater indecision. Get ready for another strong price move. So if we can see crude oil selling off, we can be shorting the oils. If we can see trucking stocks are trading off because the transportation stock or index is trading lower, just have a better probability that you're going to be in the right direction at the right time. You just posted the sectors. Okay. And most of your trading platforms, if you're not familiar with the different sectors, you could type in, there you go. All right. So there's probably, MC, that's a list of the all the sectors. Okay, so Saturday we're going to do a free training. And the reason we're doing that is the H.J. Heinz concept. Now, obviously, living here in Pittsburgh, pretty familiar with H.J. Heinz, one of the major companies here in Pittsburgh. But the story of H.J. Heinz was that his mother cooked up, what was it, horseradish that had a lot better quality to it than everybody else's horseradish. And so he did a couple different marketing concepts. Instead of the green bottles, which was what the normal color of glass was back then, he got a little bit more expensive bottle and made it a clear bottle, number one. And number two, he took the horseradish around to customers and the grocery store owners and let them taste it. And that was his selling point. When they saw that this was a better product, they all bought it. Well, that's the same concept we're using. I run into so many people, or so many people ask that they say they don't understand candlesticks. It seems too complicated, and there's too many of them. We're going to do a free session to just show you the logic that is built into candlestick analysis, and we're going to do it on one signal, the doji. We call it the dynamic doji. That if you take all the different aspects of where a signal or pattern is developing based upon what signals you can recognize and what you expect after a signal, you dramatically improve the probabilities of being in the right place at the right time, which always goes back to my basic statement of candlestick analysis that prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. So that's what we're doing on Saturday. It's about an hour, hour and a half. And it's the type of thing where you just stay in your PJs and bring your coffee or your cocoa, and you're going to get a lot of information. So, all right, so on sector analysis, that's why we want to put our stars in alignment. So let me make this smaller. Again, when the NASDAQ was heading down and the Dow was heading up, we knew, I think we start at 10 o'clock Eastern time. So we'll probably go to almost noon time. I wouldn't even know how to say your name. Lackmavir? Oh boy. Lack, if you scroll up a little bit, Becky has already put in the link. That's right. We're only going to go for about an hour and a half. How about upload it to YouTube? I haven't figured out how to do that yet. Plus, I wouldn't be able to see any questions that you had from there. Yeah, we will be recording it, so if you need it, yeah, we'll send it out for free. FT, who said 8 p.m. Saturday? 10 o'clock in the morning, Saturday. Oh, how to upload it afterwards? I'll have to have Abraham figure that out. Okay, so here's what we saw this week. A lot of whipsaw. And look where the belt hold. Remember what a belt hold does. Gaps way out of the trading range and comes back into the trading range. Link says 8 p.m. No, it doesn't. Does it? Becky, does it say? All right, well, I don't know. Oh, that would have been for Tokyo time. All right. It says Saturday, May 22nd, 7 p.m. All right, well, anyways, it's 10 p.m., so try to remember that it's not 8 p.m. With a belt hold, does it have to come down more or just below? No, it has to be significantly away from the trading range. Now, there's going to be some that look like they're a decent amount away from the trading range, but that's not out of the trading range. Email a link for us. Email a link to who? Okay, there's is it for friends of subscribers? It's for everybody. If you know people that you kind of mentioned candlesticks to, and this is just a good way to no, it's not a cradle pattern. That should have been a big red candle, plus that should have been a much bigger candle. To known to recognize breakouts, you are going to introduce other indicators. And yes. Yeah, when we do the session on the 29th, it's going to be showing all the things that you look at to identify when a breakout is about to occur. Okay, so let's take a look at some of the ones that we've been playing with. We recommended Avid today because of that big bullish engulfing signal off the T-line and looking like a J-hook pattern getting set up. So it didn't really execute today. Because part of your entry strategy would be that you wanted to see it open and trade positive. So it kind of opened and traded lower. So where's our buy? If it comes up through today's open and tomorrow's trading, kind of giving you a doji sandwich, you want to be buying because it's confirming that pattern. I'm going to go through the ones that we've been trading real quick. IBRX, this is a double doji setup. Notice how They gapped it up, consolidated, and then took it up again. That's a high probability. The above link at 8:22 p.m. is for tonight's webinar. My name. Okay. Here, we can do this just to see if this is right. Okay. Yep, I see it right here. Ooh. It does say that, Becky. We need to change that to 10. I'll have Abe change that. I'm typing this over to Abe. So here's the reason we were buying some of these. Look at CVS. Nice J-hook pattern, gapping up, still moving up nicely. ET, staying above the T line. Coming out of this fry pan bottom, you just stay long on this one. Did I miss the part on sector strength? Lou, it was a very simple process. If you can analyze which direction the market is moving, and then you can analyze or scan for the strongest sectors. And you can do that two ways. You can either scan for the strongest sectors, or if you find some stocks that are really moving strong, then you can see what sector they're in, go back to that sector and see if all or many of the stocks was all right, there's a corrected link. Thank you, Becky. So it's just a very simple process. ET, does the red candle on Wednesday make it an evening star? No. An evening star is a big up day, a day of indecision. Let's see. This is more of an evening star that occurred in the Dow, even though it wasn't in the overbought area. A big up day, a day of indecision, and a big down day that closes more than halfway down that candle. And KPTI, anytime you see a big signal closing above the T line, the probabilities are that there's been a change of investor sentiment. DNMR, DNMR, you can see the nice fry pan bottom. Now, not only do you have a fry pan bottom trajectory, but there's your inverted hammer. Remember what we've said about the inverted hammer. If it opens positive the next day, you've probably got a 95% probability or greater you're heading up. The next signal was a doji sandwich that came up through the T line. You add that to the positive trade on the inverted hammer, more bullish evidence that you're heading up. And the more evidence you have, the more you're concurring that the fry pan bottom is working. So in this situation, you just stay long. Now, the strongest signals we found last week were the kicker signals. Opens here, closes here. The next day they gap it up and go the opposite direction. Now the market waffled around, but look what the trend of this kicker signal did. It just kept steady because that's what the results of a kicker signal is likely to perform. That strength of that kicker signal tells you as long as you stay above the T line, you can stay long. So the reason we're pointing these out is there's about, well, there's the 12 major signals. That's your bread and butter. Everybody should learn those. Then you have your patterns. Then you have your top ranked signals and patterns, which there's about 15 or 18 of those. But if that is too much for you to learn, I tell people learn 3 or 4. The 4 I would pick right off the bat would be the best friend signal, your doji gap up, the kicker signal, the fry pan bottom breakout, the J-hook pattern. If you not only learn them, but you become an expert at them so that you're at the point where you know exactly when to buy, know what indicators to continue to hold that position, and know when to sell, now you're not at the mercy of somebody else giving you recommendations or hearing all the news out there. You've got control of your own investing. Even with 3 or 4 of the signals or patterns, you'll have more trades than you'll ever be able to handle. So at that point, it just becomes a process of trying to cultivate which ones of those good trade setups are the best. So bingo, kicker signal, headed higher. We bought IGT a while back off of that kicker signal. Look what that kicker signal was producing. A J-hook pattern, producing a very nice uptrend. So anytime I see a kicker signal, I'm ready to buy immediately. This is what we call a bullish flutter kicker signal. Opens here, closes here. They gap up and do a doji. Now, what do we know about the doji rule, which is what we'll be going into on Saturday? The probabilities are going to be that if it opens, it's going to move in the direction how they open it. So as soon as they open it positive, what can we assume? They're going to trade it positive. So if you took out that little flutter, you basically have a kicker signal. I have you lists of the top ranked signals and patterns. Yes. If I see a kicker signal forming, we will buy it immediately. On this day right here, when it was trading at $2.90, you could see that it was a kicker signal. And so the rhetorical question or a rhetorical answer is, do all signals produce these type of price moves? No, but the probabilities of being in these type of price moves are dramatically enhanced when you know exactly what type of signal is setting up. You could do the reverse for a downtrend, yes. A bearish best friend. You don't find the bearish scoop pattern very often. Now the scoop pattern is one of your high probability trade setups. Let me make this a little bit smaller. Scoop pattern is, you wouldn't be buying this because you think it's going to be a scoop pattern, because you wouldn't even be looking at it until right here. And what's happening right here? You're bouncing up off the 200. You've got a doji sandwich. You're bottoming. And hey, looky there, a flat handle. That's when you recognize the scoop pattern. So you're going to be buying when stochastics are up here already. Is that a deterrent? No, because if you can see there's a flat handle, what's our expectation coming out of a scoop pattern? A huge price move. whoops, somewhere in here. Yeah, there's another little scoop pattern. When it broke out, even though your stochastics are up here, if you can see this is a scoop pattern, you figure your slingshot effect is going to be to the upside. Now, here's another reason why you want to know the 12 major signals. What happens when they gap it down and start going the opposite direction? There is no scan for a scoop, and you don't need a scan for a scoop. You're not going to be out there looking for a scoop, and it's not going to even perform until you see this. So if I'm looking at this, there's nothing there. Looking at this, there's nothing there. There's no reason to be scanning for a scoop pattern. It's right here that when it breaks out, we can also then notice there's a flat handle, which is going to put you into a, yep. So trying to scan for a scoop pattern, there's no reason to. Bob, what is the difference between a scoop pattern and a J-hook pattern? Or can somebody help Bob? Now I'll answer it. A scoop pattern has a flat handle. A J-hook pattern has a strong up move and then a pullback. Which is stronger, scoop pattern or a fry pan bottom? It doesn't matter. There's going to be times when you can find a scoop pattern, and there's going to be times you find a fry pan bottom. So there's no reason to find which one's stronger, because very rarely are you going to be sitting on a day where you have to decide between a scoop pattern and a fry pan bottom. Does there exist a big scoop pattern? Does there exist a big scoop pattern? In that case, it kind of looks like a fry pan bottom, except the flat handle goes into a fry pan. You can sometimes have that where it's a flat handle and then it's kind of a mild scoop pattern. Shall we consider a positive big candle after a doji or a spinning top as a kicker? No. A kicker signal is a big down day followed by a big up day. Now, the nice thing about a kicker signal is that it doesn't need to be confirmed by stochastics, because a kicker signal is so strong that it can occur anywhere, and it's going to tell you there's more upside or more downside. Oops. I need to get back to. Okay, let's see. LFMD had a little kicker signal. Where do you think the first target's going to be? The 50-day moving average. Would you recognize a scoop when scanning for kickers and then see the scoop? Yes. So you're visually recognizing that if there was a strong price move, and then you can see instantly there was a flat handle prior to that, yeah, now you know you have a scoop pattern. You can be a little bit more aggressive, where everybody else might say, oh, it might run into that heavy resistance area. We look at it as something that is going to cause a slingshot effect. So would you say the J-hook pattern is what would be the third wave? Yes. Mayran, no, it's wait for it to break out through the 50. HLR is almost a kicker, but you would consider this more of a best friend type signal, or a gap up. So it's not, you put it in the kicker classification just because of that gap up. And that's what causes these big price moves. Let me, I'll come across those. I just want to keep things in order or I'll get confused. So here's what we're looking for. Look at your bullish harami, doji. Remember, anytime you see a doji in a pattern is usually going to make that pattern more effective. Remember what our best friend is. A doji followed by a gap up. So you got a doji harami telling you the selling had stopped. Now you gap it up. That tells you you've got good strong buying in place. You can see the same thing over here on B-Zone. There's your best friend gap up. All right. Okay. Some others people have been trading in the chat room. Look at your kicker signal that started this uptrend. Notice how it couldn't really close below the T-line. Now it's come back up through what we would probably be pretty close to calling a bobble breakout. It's a J-hook pattern that fails right at an obvious resistance level. You definitely could be a buyer of this one on positive trading tomorrow because of the doji rule, which would tell you the next wave is still in progress. On the short side, real quick, first of all, that's kind of your evening star signal. And there's your bearish left-right combo right here at the failing at the T-line and closing right on back on the 50. Then they gap it down. So what can we assume about this trend? Wave 1, wave 2, and a strong move to wave 3 to the downside. Or if you can see that crude oil was trading lower, there's your bearish harami, one of your 12 major signals, followed by a gap down. That tells you there's a lot of force to the downside, which is also being confirmed by the stochastics and in a downward direction. So this is why it's so easy to recognize where you can go short and where you can go long, even if the market conditions might not be in favor of one direction or the other. We were looking for a double doji setup today on BCRX. Double dojis where they take it up, do a doji consolidation, and then take it up strong. You could still be buying this one on strong evidence of buying tomorrow, because that would give you a J-hook pattern. Yes, quad was one that looked like a scoop pattern. There was your flat handle. So this is why the pattern is what you expect, but the signals are what tells you exactly going on. So notice when it got back up here to the handle, it did a bearish engulfing signal. Not only a bearish engulfing signal, but did it right here at the 200. What was that evidence of? That was evidence that they weren't breaking it out, that they failed up here to close out the position. So remember, these patterns have high probability results. And the definition of probability is that it's not guaranteed. So there was your big breakout move. What do you expect after a big breakout move? This was information that told you they all of a sudden became very interested in this stock. Consolidated, never closed below the T-line. So we've got two probabilities here. One, they could do a J-hook type pattern, or two, a 45 degree. In both cases, it's positive. Matt, it still had to be way up higher. Let me get through these. We got a whole list of ones to be looking at here. Here's another one, Hecla. When it broke out through here, look at your little morning star signal. Hasn't sold off. You're in the overbought area. You still should be in an uptrend, but where would you put your safety stop? Probably at the low of today, because logic says if it comes back down through there in the overbought area, they're likely to come back and be testing the T-line. Same scenario here on Nucor. There was your fry pan bottom. held up at the T-line, and notice what it hasn't done. It hasn't closed below the T-line. That is very relevant information, because as long as you stay above the T-line, the probabilities are dramatically in your favor that that price move is still going to be in a positive move. So what would we do with this? If it started trading positive, doing kind of a J-hook pattern, you could buy it, still buy it, because of that J-hook pattern setup. So again, NVIDIA did exactly what the NASDAQ did. A belt hold type signal confirming. Tesla, little teeny belt hold, not significant, but gap up. When would you buy this one? When it closes above the T-line. What is the protocol when a buy signal is below the T-line? Remember, the number one priority for analyzing candlestick signals are the signals themselves. Now, if there's a buy signal that closes right at the T-line, I'm not going to buy it until it closes above the T-line. If it happens to be way down here and does a buy signal, I'll buy it with the anticipation it's going to go back up to the T-line. Netflix broke out today, kind of that little belt hold. So what do you got going on here that makes this an attractive buy? First of all, you've got a piercing signal, one of the 12 major signals. Doji, 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 kind of a little belt hold gap up above the T-line. What's that tell you? Your downtrend is broken. Now you're in an uptrend. Apple, that little kind of mini belt hold. I say mini belt hold. A belt hold is you want to see something significant. However, look at the significance of this one. They opened right down here on the 200 and took it back up. If this opens positive, what's it telling you? They've broken this downtrend. It's going to be trading positive from here. Amazon seemed to be the weak sister of all of them. Really doesn't have any dynamic direction. Marvell, there's that big bullish engulfing signal, bullish confirmation. ADI, big bullish engulfing signal, gap up. And what did the gap up tell us? This wasn't going to act as resistance. This is not acting as resistance. And this isn't acting as resistance. We're now in an uptrend. Bullish engulfing, gap up through the resistance level, off the moving averages. What's that pretty much tell you? You're probably starting the next wave to the upside. So again, when I say probably, the probabilities are pretty strong that if we're recognizing the signals that the Japanese rice traders have illustrated as being reversal signals, that we have an advantage of just looking at stocks in an uptrending mode. We're looking at stocks that now have the possibility of moving much higher, because look at Cisco. When it did this belt hold bullish engulfing, what did that tell you? Bulls and bears, bulls and bears, bulls and bears. The bears get out. The bulls sop up all the selling. There's no sellers in the way. Now any buying has a lot of running room. This is what we are looking for. The fry pan bottom type patterns. And the rhetorical question always is, do we always get moves like this coming out of a strong pattern? Definitely not. But the probabilities of being in something like this are greatly in your favor. Oops, I think I've got this one twice. LSPD, LSPD. That's your best friend signal. That tells you there's going to be a lot more upside, the doji gap up. So the gaming stocks seem to be working. We're making good money with IGT. There's a big J-hook pattern setting up in gravity. There's your left-right combo. There's your gap up. Strong signal. That's an SE. And T2, there's your trend or a doji sandwich, big breakout. So anytime I see a strong signal, look at your kind of your Morningstar signal with a kicker type move to it. Can you catch all of these? No, but if you're going with the signals and patterns, you're putting yourself in situations where the probabilities are much greater to be in your favor. Oh, I haven't even some more in that area. Electronic arts, bearish or bullish engulfing signal, ATVI. Bullish engulfing broke this downtrend. Just high probability there's going to be more upside. So the thing that we can learn, whoops, let me see what this one is showing us. So there's that gap up. But the things that we can learn is knowing what should happen based upon, look at our Morningstar signal gap up. Now, a lot of people will say, and I even heard somebody in the chat room today say, I'm going to wait for it to pull back, so I wait for it to come to me. That's a very stupid approach, because if you see a strong buy signal, what do you want to see? That they're still buying. If you're waiting for it to come back to you, what's that telling you? It tells you there's sellers there and it's not as strong as what you'd like it to be. You want it, I'd rather be buying into strength, confirming the signal. So there's your best friend on GTH. One whole method of trading is when you see these big price moves, knowing how they should open the next day and knowing what type of move it should be. Where is a stop loss after opening gap up? Well, if I was buying here, what color candle would I be looking at? A green candle. When it opened here and traded here, what's it telling me about the bulls? The bulls are in control. If it came back down through the open, what color is that candle turning? It's turning red. And what's that tell me about the who's in control? That tells me the bears are back in control. I want to be out of that trade. So if I was buying right here after opening here, I'd have a stop at the open. And TGLS, the bigger the signal, the more compelling it is that you're going to be in a 45 degree. I power, the bigger the signal, the more compelling there's been a change of investor sentiment. BNTX, look at their belt hold. This is what you want to expect after a belt hold, is that they've wiped out a lot of the sellers. Now they're taking it back up with less sellers in the way. EXAS, doji, 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 gap up. That's kind of your cradle pattern. That one implies you're going to have a lot more upside. You might see that one on the recommended list tomorrow, especially for an option trade. So the semis all came out pretty strong. And when you see the whole sector trading strong, you can see UCTT, 5-pan bottom being accelerated by the belt hold type signal over here. Beam, Beam, very simple, doji rule. This opens positive tomorrow. It's going to trade positive, telling you they're up through the T-line, probably breaking this downtrend. M-Power, kind of a big bullish engulfing, followed by bullish confirmation. So what happens when they open positive after a bullish signal? In this case, 1, they're telling you they're confirming the bullish signal. And 2, they're telling you the T-line is not acting as a resistance anymore. Now you look for the next target. S-power, left-right combo. Oh, this is what I was going to do on run. Same thing here. If it opens positive, you got a left-right combo and it looks like a bullish doji sandwich. This was a doji going into the close, and then they started buying it. But now what can you expect after a left-right combo gap up? More than likely, they're taking this all the way up to the 50. Luann, save the individual ones until I tell Jim to do the double line, but everybody's been asking about space. Space opened positive and traded lower. This is what you call a message. Doesn't look real good. But what was the message? The message was they wanted to get into this stock with great exuberance today. And then there was profit taking. So if you've got a stock with great exuberance and profit taking, what do we look for? Look for when the profit taking's over. That could be a doji, a hammer, a bullish engulfing signal, something that tells us that the selling has stopped and the exuberance is now going to continue. AMAT has been kind of a dead stock for a while, but it did a belt hold piercing signal, gap up through the T-line, through the 34 and through the 50. If it trades positive, telling you this has been breached, they're heading higher. So this is all to kind of illustrate that if you have a set number of positions on and you can identify which sectors are the strongest, if I've got a 10-position portfolio, right now I might have 2 or 3 positions in the semiconductor area. I might have 1 or 2 positions short in the oil area. I'm trying to think of something else was acting strong. The mining stocks, all doing J-hooks. If they start trading positive, maybe I have 1 or 2 in that area. And then the rest just individual stocks. But it allows you to put your money in situations where the probabilities are greatly in your favor. So I think this is a cradle pattern. You can pretty much see how flat this was, and then they gapped it up. That's a cradle pattern. Where do you think your first likely target's going to be? Filling this gap. So at least it puts you in the right direction. Where's your second target? Probably up here to the 50. So anytime you see a left-right combo out of our 18 top-ranked signals and patterns, you put the best friend signal as number 1, probably the left-right combo is number 2. And you can see on AWH, a left-right combo. Look how all indecisive it was through here. Then the left-right combo is kind of that cleansing, telling you they're starting to take this up strong. PLT, a left-right combo, right smack dab off the 50. So this is who was asking earlier. Somebody was asking, Howard, would I be buying this on positive trading with the T-line still way up here? Yes, because what would I expect my first target to be? The T-line. If I bought this here and it closed here, now what's my strategy? I want to see it go through the T-line. If it opened lower and traded lower, would that tell me about the T-line? They're not going through, close it out. So everything that you apply to candlestick analysis is just mere common sense. And when I started learning candlesticks decades ago, the one thing that kept striking me in the side of the head was, man, this makes sense. And the more I looked at it, and the more I analyzed it, the more sense it made. So you don't even have to be a sophisticated technical analyst. All you have to do is recognize when when their signals are telling you there's a change of investor sentiment. Whoops, did I scroll backwards? I did, looking for... Okay, so you can, the S&P, well, this is the SPY. The S&P 500 actually did a Morningstar signal bouncing off the 50. The NASDAQ, this is a very strong reversal, the belt hold gap up. Oops, hold on, this is going to be a spam. Yep, I guess they, yep. As fast as, no, you're not buying stochastics. All stochastics do is tell you where you are in the trend. So use slow stochastics. Okay, guess that's about all I got. Oh, I know what I was going to, let's see, which one was I going to illustrate? Something like this, kind of a doji day after a left-right combo, makes this very simple. If it opens positive, you want to start buying immediately because the probabilities are pretty strong you're going to have another day the same magnitude as that day. Okay, are there any general questions on candlesticks? If not, Jim, go ahead and do the double line. And then 3.1 seconds to the next double line. All right, I'll start back up here. OXBR, big breakout. Now, this is where the probabilities are strong. If it opens positive, you can buy it. If it opens down here and you are long and starts trading lower, you close out the position immediately. That's statistically telling you they're taking profits. If it opens down here and trades lower, where do you buy back? When it comes back up through today's open. Dropbox. Stay long on this one. PLTR. Nothing great here yet, but you do have the big bullish engulfing. You're above the T-line. You stay long as it stays above the T-line. And ACB, nothing here yet. This is, if you were buying, you could stay long, just see what it does at the T-line. If you're thinking about buying, with it already moving up, you don't buy until it does get up through the T-line. Twitter, you could buy this one on positive trading. Yes. You can buy Twitter on positive trading. That one you could buy. An MTA. This one is consolidating. So here's that example where it opened here and started trading lower. That's where you closed it out if you happen to have been long on that day. Now you wait to see what it does once it gets back to the T-line. Kind of the same thing we did here on Chris. Notice how low it opened here, but it hasn't closed below the T-line. After a big day, you look for consolidation, and then when the consolidation stops, and that was evident here on that Doji Harami, telling you the selling has stopped, now you can buy with either a J-hook or a 45-degree prospect. Cisco was not so much a, yeah, it was a belt hold bullish engulfing signal. Correct. Whoops. FWAA, inverted hammer, doji, doji. Now, what's the other observation? Look where the dojis occurred, right smack dab on the 50, in the oversold area, bullish confirmation, kind of your cradle pattern. That one you could be buying on positive trading. An MPC, that's kind of a nothing right now. If you were long, and you've stayed long after the bearish Harami gap down, it has to open positive and trade positive. If it trades lower, close out the position. Yes, CVS has the J hook in progress. So there's wave 1, wave 2, wave 3 should be the same magnitude as wave 1. Oh, somebody was asking, do you ask about D-Dog earlier today, and I forgot to mention it. But I would just stay long with the expectation you're going to the 200, but you also watch to see what they do right here at this level. Boeing, nothing yet. Probably wouldn't be long or short on this one until it does something that gives you much more evidence that the bulls are in control. The bigger the signal, the more compelling there's been a change of investor sentiment. So here's another one, and this is just simple when to take profits. If you're that far away from the T-line, it didn't look like you should close it out. That thing is just driving me to drink. What's going on here with that? That's not what I want to do either. There we go, thank goodness. But the bigger that signal was, that told you to be out of this trade. And Oracle, this is where you observe the obvious. Which direction is this going? Pretty much sideways. When would I pay attention to this? Probably when it came back up through that level. And Matador, JB, what do you think Matador has done since it closed and we looked at it this afternoon? I'd be out of Matador. And Bristol stayed above the T-line. You can stay long. Now you want to see what it does right there. So if it opened lower tomorrow and started trading lower and I was long, I'd close it out because that would tell you they failed at that level. Crude oil backed off today, and it's down some more. So crude oil is probably in the 60, I want to say the $60 area. Backing off. And Roblox, nothing exciting. Probably not anything worthwhile until it gets up through that resistance level. Roku, you can stay long. Look at your bullish engulfing right off the 200. Now this is significant in that because we've got the graphics, we can see exactly where they started buying, which obviously is a bullish signal off the 200. You stay long. Now you just watch to see what happens once it gets to the 50. I have to talk fast because the darn raccoons are having a raccoon fight outside my door. This ETF, left-right combo, implies there's going to be more upside. First Solar, acting well. CSIQ, acting well. Snow, another one where you can stay long, but now you got the doji rule. Remember what happens when they come up, look at your kicker signal, but when they come up through a resistance level, what do they usually do? They come back to test it to see if it's going to act as support. So you see what, if they pull it back and see if they bounce off the 50. If they do, everybody and their brother can see it resist or supported at the 50. They start buying. So that becomes a very good place to to start adding to a position. Salesforce, the gap up, you want to see this open positive and trade positive. If it does, this is an island reversal, which means you could draw right around this area and not touch anything because of the gap here and the gap here. That's a good implication that they're going to be taking it up at least to the 50-day moving average. And TTCF, you stay long. So here's another case where if I was long and they traded down here and I closed it out, I would have been buying when it came back up through the close of the previous day. I think we did this one. This one also came off the kicker signal. You just stay long. Lift. You can stay long. It's not quite a kicker signal. Remember, it has to open up above the previous day's open, but it still implies there's bullish force. The only difference is you watch more diligently when it gets to the first resistance level. When they don't have a full-scale candlestick reversal, you watch the first resistance. Oops, what did I do here? Is that RLC? It's not coming up. This one, you can stay long, but it definitely has to open positive. If you stayed in after they gapped it down, it had to open positive and trade positive today to stay in it. And Moss, oh boy, if you're short, you stay short. The shooting star gap down, stochastics heading lower. If I was short, I'd stay short, but I have my safety stop at today's open. 3D we did. Now this one is easy. If it opens positive tomorrow, it's telling you wave 3 is still in progress. You can be buying it immediately. Best you've got a fry pan bottom. Now we made a lot of money on this one when it did the hanging man gap down. We started buying puts, and we covered our puts right there. Now, why would we cover our puts right there? Because look how far away you were from the T-line. And as soon as it started doing buy signals and trading back up above the 10-minute T-line, it was time to take profits. What signified the fact that that was a good place to take profits? The fact that we could analyze they were that far away from the T-line. Right now, you've got kind of a fry pan bottom. You could be buying this one on positive trading. An MPC, did we just do this? Yes. Did I go backwards? Maybe I did. If this opens lower and you were long, I'd close it out immediately. Jill, we pointed out a few days ago, after this little breakout, a few days ago, I pointed this out when we did our private training session, that this was a fry pan bottom. This was telling you had a bigger fry pan bottom breakout. If you're long, just a very simple trading rule using candlestick logic. If you're in the overbought area, where's your safety stop? It shouldn't come back down through the previous day's open. If it has that much strength, that means it's heading back to the T-line. Another breakout on SGBX. You could be buying that one on positive trading. Pixie, nothing great here yet. Not until they can get up through the 50. But here's another thing about human nature. When you have a big move like this and the bears come in and they find equilibrium, it's not unusual to see it go flat for quite a while. There's a bunch more I could show. OCGN, kind of the same scenario. EYES, got a broke down, went flat or negative. Did I do ride? Ride, This one I would have closed out today because they hit the 50 and then they gapped it down and closed below the open. Who's in control at this point? Definitely the bears. So you should have closed this one out. That's not a pretty chart. I think we did FWAA, Zine. You stay long on this fry pan bottom breakout. Look at your inverted hammer. Inverted hammer, bullish confirmation. I think we did PLTR. You stay long as it stays above the T line. DQ, stay long. Fubo. Nothing here of any great consequence. You can see there's kind of a resistance level. You're running out of steam on your stochastics. If you're long, you can stay long, but you have your safety stop at the T line. It shouldn't come back in that direction. That's a bunch there, Leap. I'm doing fast. MTL, look for a 45 degree. SENS, you stay long as it stays above the T line. XPSA, there was your kicker signal. Gap up, opened on the T line and came right back up. What did that tell you? They were still buying. You can still be buying this one on positive trading, trying to break out through this level, coming off your kicker signal. And CETX, oh, not a pretty chart. Just not a pretty chart. No real reversal signals. They have gapped it up. If you like trading this or want to trade this one, if it opens positive, you can be buying, and then you have your safety stop at today's doji. DRNA, doji sandwich, bullish engulfing, you stay long. And then DM. It has to open positive and trade positive to stay in it. Marna, you could be buying this one. Look at the bounce right off the 50 a couple of times. Get rid of that. Look for wave 3. Oh, mercy sakes. This is R. That's a smorgasbord. I'm going to do the first 3. Zim, get ready to close this out. If it opens lower, it's coming back to the T line. IDT, stay long. Nice fry pan bottom. And TMST, this one you would have closed out today with it staying below the T line. BGFV, this one you would have closed out with it. You shouldn't be in this one. Right now you don't know which direction this is going. Let's see, did we do MTA? Looks like it's trying to come back to test the T line again. When you have a large candle that you are aware of at the end of the day, would you enter at any point in the price move that day, like BTU, the large candle before? If I see a big price move on this type of day, or even on this type of day, I go to the 10-minute chart. Let me think if I can think of one that had a big price move recently. But if you have a big price move and it's trading up, go to your 10-minute chart and see if it's still trading positive. AMC is just not a pretty chart. You can see when it hit this level right here, it topped out, and that's what your doji told you You should have been out on this one, and I wouldn't be long or short this one right now. Is that the symbol? Dave and Buster's could be heading further down, yes. You can see how it's oscillating to the downside. Oh, not necessarily. Well, you could put it in that category. Yeah, I'd put it more into a V reversal. You could, so you still have the same analysis. If you want to call this a scoop pattern, you still want to watch to see what it does right here. If it fails there, that's the resistance level. AU, get ready to take profits if this opens lower. Look at your shooting star type doji. Didn't trade up. Let me make this bigger so we can see it. If this opens lower, where do you think it's heading to? Back to the T-line. Remember the T-line rule. The further away you move from the T-line, the higher the probability it's going to come back and test it. We did Tesla. Tesla you can buy once it gets up above the T-line. Walmart. Walmart's just not a very good trading stock. Just doesn't have a whole lot of trend, and even when it moves, it doesn't move in big percentages. I'd be someplace else. AMD, kind of the, AMD is better. I was, your bullish left-right combo, at least look for the 50. It was AMC that is kind of dismal right now. Uh-oh. And Zynga, that's not a good chart either. It's just trendless. I'd be someplace else. And PayPal, that's your belt hold. Bullish left-right combo, gap up. If you're long, stay long. If you want to go long, wait for it to start coming up through the 50. Yeah, you're kind of hoping, though, Deborah, that if it gaps up, but on anything that gaps up after a bearish day, yeah, you'd probably want to be buying immediately. That's just not a pretty chart. Las Vegas Sands, you can get ready to buy. There's a support here at the 50, and you've gone through the T-line. Ford started back up. You can still buy this one. Well, what's going on here? Positive. The doji rule, which means it's breaking out through this level. And GM, nothing. Would not be long or short. Did you fall asleep, Catherine? Or you want Zillow? Little belt hold. You can buy this one. Trading positive. ExxonMobil, nothing there. If you're short, yeah, I probably wouldn't even be short because it's got too much support. I'd be someplace else right now. Target gapped up the other day. Not quite a kicker signal, but I would suspect it's going back into the 45 degree. Chipotle, that's your best friend signal. Doji gap up. If it opens positive, you can start buying because that would tell you this downtrend is over. And Posh, you could buy this one. It's still not a very dynamic looking chart. If you like it, you could be buying it on positive trading. I probably wouldn't trade this one, though. It's just doesn't really have any trend to it. And Teradata, you could be buying this one. There's a wee little teeny gap right here is likely to be the first target. Jemiah, you stay long ever since the belt hold piercing signal. Silver, you stay long. Let's see what silver is actually doing. SIAN. Right now, silver's trading down at 21 cents, but you're still above the T-line. JB, didn't we do these this afternoon? They don't move very much after they close. Right now, yeah, there's really nothing exciting here. If you're long, you can stay long on this one. And AIKI, if this opens positive tomorrow, you can be buying it. Steel Dynamics, this one you should be out of. I wouldn't be long or short on this one. Miss Tesla. Nothing yet, but you do have a gap up if it starts trading above the T-line. You can start buying. IQ. Kind of a fry pan bottom. You stay long as this stays up above the T-line. CP. That's a bullish engulfing right off the 34. You can be buying this one on positive trading. Definitely want to see it break out through that resistance level. JD.com. Another one that you could buy on positive trading after your left-right combo. All right, did we get them all done? Oops, a few more. ABBV. Bullish engulfing. Really hasn't closed below the T-line. You just stay with it. I think we did this one. This one has to open positive and trade positive to stay in it. You don't want to see this one open lower. And ACTC, another one that you could buy if it opens positive, the doji rule, breaking out through the 50. SRNE, stay long. SRPT, another fry pan bottom. Let's make this a little bit smaller. Oh, I didn't want to do that. Nice big fry pan bottom. You could buy this one on positive trading. And AHT. Stay long as this stays above the T-line. SI. You can buy this one with the anticipation it's going to the 200. Okay, lots of good charts out there right now. You know, I'm supposed to write some of these down. One I'll probably be looking at is this one. Kind of a cradle breakout. Expect it to come back up here. Oh, yes, and so if you've got people that would at least like to see the concept or the logic in candlestick analysis, give them the link. Let them come and just see why common sense graphics tell us where we're in high probability. Oh, Becky, do we have a password for Saturday? Since we don't have a password, we might just do it without a password. Or, yeah, just register, and that way you'll get something sent to you. All right, everybody. Nice summer night. The raccoons are fighting with each other to eat my bird seed. So we'll see everybody bright and early tomorrow morning. We'll see you then.